Yeah, this is our refreshing spot at the lake. Yeah, I can remember hearing Sandy say after we got married, right after the ceremony, I heard her ask somebody, did you ever want something for a real long time, and when you finally got it, you didn't want it anymore? That kind of made me suspicious. Brad, this isn't at our house. This is at the lake property, or the lake house. We usually only do it once a year. Anyways, the reason I put this up was because somebody was asking, how do we know what type of apparel you wear? You can see we're very formal. Yep, the Finger Lakes are, especially during the summertime, it's like almost like a big Disney World where you got there's plenty of places to go. Anyways, that's our setup. That's our education setup. Is we're looking at the screens here, and then up here we're looking out the windows at the lake, and we try to keep it from where people get too brain fried. We keep everything moving. Where's the cat? Okay. So as we can see, once the Dow got back up above the 50-day moving average, they haven't really been able to back it off. Same can be said about the S&P 500. So, bunch of dojis in here, which gives us at least a prospect of I've done something wrong here. Oops, hold on. I got to get things shifted around here real quick. Okay. Obviously, a bunch of dojis in the overbought area. We've got either the prospect of a wave 1, wave 2, wave 3 J-hook. And we want to be a little bit more conscious of what happens in the NASDAQ, because the NASDAQ came up and it's now trying to nudge up through the 50. So we know, Roy, yes, I've got that written down. We're going to try to do that here in the next, within the week. If they come up through the 50 doing a bobble breakout, that's a pretty good piece of evidence that the markets are going to continue higher for a while. Some of the other traders right now, let's see, I want to make this smaller. Right now we got crude oil kind of hovering at $52 a barrel, not really going anywhere. Gold still kind of holding up in an uptrend. And then the grains, oops, they gapped up soybeans again. You can see the J-hook type pattern on soybeans. Corn was, and the reason I'm following these, obviously they're in the headlines right now, based upon all the hey, Jiminy Christmas. All the information or all the news about the weather not letting farmers get their crops in. You don't see grains. This is wheat. CB, are you seeing that? So anyways, the nice thing about these type of market conditions is even though you might not have a very strong trend in the market, we've got plenty of good stock trade setups. And I'm just going to kind of go down through the ones that we're in. And that's crying out loud. The first one I pull up doesn't come up over here. That's just great. We recommended Skechers today because you can see the bobble breakout. So still makes for a very high probability trade setup. If this opens positive, you've got a left-right combo, you've got a bobble breakout. Now you've got the potential of a bullish doji sandwich continuing this move. If this is wave 1, wave 3 should come up into this area. We recommended BRFS today, but when it opened and immediately started trading lower, obviously makes it not a buy. Now, it's still a buy because we've got the best friend signal. If it comes back up through the open of today, you definitely want to be a buyer. That tells you the consolidation's over, that the signal is now kicking back in, hopefully with at least coming back up into that trajectory. I'm going to make this chart even smaller yet. So just visually, you can see we've got kind of a scoop pattern setting up. Maxar, another one that's got the potential of a bullish doji sandwich tomorrow. Because look at your evidence. The buying right off the 50, the bullish confirmation through the T-line. Notice what they did today on a consolidation day. And when I say notice, anytime you see them come back and use the T-line as a support, you always got to keep in mind that nobody has the T-line on their charts, except us and a few others. That when they use the T-line as support, they're telling you the bulls are still in control. Get ready to buy this on positive trading tomorrow. SFIX, 45 degree, based upon a very simple pattern that we recognize. When they gap it up and give you a message, you start watching to see when the profit taking's over, because that message is pretty much telling you there's been a new strong urgency to get into this position. Same scenario here on BXG. Best friend gap up, indecisive. Now they told you which way they're gonna go. I would probably first target the 50-day moving average. There was one more. Bah humbug. I thought I was gonna flow right into this. Oh, there it is. ARQL, best friend, message, continuation of that message. So this is the reason I tell people to kind of concentrate on 4 or 5 high profit patterns, because if you knew what was supposed to happen after a message, you could have been buying right in here, knowing that they were immediately starting to head up. And you also would know if you were buying on the move up where you wouldn't want to see it trade, probably back below the low of the day. So at least you now have your trading rules or trading basics set up, knowing what to do when. XON. Here's one where we took some profits earlier in the day, and then we bought right back when it came back up through the open, because where's our likely target? Still up here at the 200-day moving average. This one. Nice big fry pan bottom, doing what it's supposed to, coming out of that fry pan bottom. new, came back to the T-line today. So if you're long this one, you now have your simple rule here. It needs to open positive and trade positive. If it opens lower, that's telling us this signal is now being negated, especially with it trading back below the T-line. Because remember, every time you close back below the T-line, the probabilities of the uptrend continuing, it diminishes dramatically. Here, look at the T-line crunch on here. You stay long. There's a few more like that. CVM. There's your bobble breakout. This one can still be bought on positive trading tomorrow. Notice your kind of kicker type signal, but more importantly, failed at the 50, pulled back to the T-line, coming back up through the 50. If this is wave 1, look for wave 3 to take you up into the 950 area. NVCR is the reason we like to have steady eddies in our portfolio. Just stay long as this stays above the T-line. We still have some IOVA. When the 45 degrees started, you just stay long until you see a sell signal and a close below the T-line. There was a day that it could happen. So what was our criteria the next day? If it opened lower, you closed out the position. It had to open positive and trade positive. Why would you give it an extra day? Because you got a very strong buy signal that should be putting you in a 45 degree. INGN, we've had now for a little while. You can see the pattern setting up. There's your fry pan bottom. Where do you think the first target's going to be? Right about there. So, again, sitting in a market that's moving basically sideways, it's not unusual to be sitting with 8 of 10 positions all moving in the right direction. Some of them might not be very big, but when you add them all together, your return or your percentage return of the portfolio is expanding very quickly. Another kind of T-line crunch on CBLK. There was your doji sandwich. Zine. Another one that's come up through the T-line. You stay long as it stays above the T-line. Look at your bullish engulfing right smack dab on the 50. Then your gap up through the T-line. What's the overall analysis of this one? Wave 1, wave 2, going into wave 3 J-hook pattern. Things like GH we use over in the options room. This one's got a nice, whoops. What am I trying to do? Oh, nice fry pan bottom. You stay with it. Plan. Another one of those kicker type signals that's now in a 45 degree. You just stay long as it stays above the T-line. So it's these type of setups that if you start getting your eyes accustomed, you understand what the concept of candlestick analysis is, you're buying and you know how long to hold. If this gets up in the overbought area, now you become a little bit more diligent as far as watching where to put your stops. In this case, it would be back below the T-line. That was VC, all right. So there are other ways to tell. This is one of the things that people have problems with. When do you take your profits? Well, today we closed out CPRT. There was the kicker signal. There was our 45 degree, but there was our evening star signal. Didn't confirm, but there was another evening star signal. So if you see one sell signal, what's it kind of telling you if you see two sell signals? kind of found the area where the sellers are starting to take control. If this was still in an uptrend, what did it need to do? It needed to open positive and trade positive. And just for safety, that's right. The probabilities are starting to go against you. So why stay in something where it looks like things are starting to turn over when there's other signals out there right now that look like this? When you do this, and this is just kind of a visual analysis process. There's not anything where you have to be a great technical investor or analyst. All you have to do is say logically, there's a sell signal, there's a sell signal, there's a close below the T line. What's my trajectory telling me? Probabilities are going against me. Let's go find something else. If you keep cultivating out of iffy situations, our long position on CSIQ, we did a left-right combo today. Makes this very simple. If this opens lower tomorrow, confirming the left-right combo, you close out the position. And this is where the visual elements of candlestick analysis are greatly enhanced, because where did this sell signal occur? Kind of right in the same area that it topped out before. So this isn't anything where you have to be anything other than observing where the signals are occurring. So if we've got sectors like Nugget giving us a J-hook pattern, that allows us to be going after the stocks in that sector that are producing J-hook patterns. AU, Newmont Mining, just starting a J-hook. So this isn't really all that difficult. All we're doing is analyzing patterns that the Japanese rice traders have produced for us for hundreds of years. All right, and look at Disney. Disney, we've been buying, doing some option strategies, because if this breaks out, I'm going to make this a little bit smaller. If this breaks out, what type of price move do we have setting up? Wave 3. Now, what can we analyze right here that tells us we've got the possibility of a breakout? We've got the double doji set up. Remember, when they consolidate, had this closed down here and done an evening star signal, what would that tell us about our resistance level? It was acting as resistance. Jeremiah, a lot of the what was I going to say? A lot of the scanning software, if you see a sector, for example, let me finish up and then I'll go to that next question. So if this opens positive, what do we got setting up? A double doji setup, which tells us we've got the prospect of having another candle this magnitude. Well, if we have a candle that magnitude, what's that tell us about our resistance level? It's not there anymore. Now we've got a good probability we could be in a move like this. And before I forget, ASA. Same scenario. We just bunch of dojis right in here, kind of a rounding bottom, double doji. If this opens positive tomorrow, what do you want to be doing? You want to be buying immediately. Double doji on RAI, that's right. So if I'm looking at something like Labu, which did a kicker signal today, let's make this bigger. and that's an ETF for the biotechs. Well, I don't know whether I can go right to the sector and click on that stock and say what stocks make up that sector. No, Amit, I'll go back to that one in a minute. But if I know the biotechs are acting pretty strong, I can go find a biotech sector, and you can just click on, see if I can do this. I'm going to try this. Labu. All right, so now I just clicked on Labu, and it brought up a list of the stocks that are in the biotech sector. So now I can go down and see which ones have the best looking charts. So at least I'm looking for the best looking charts in a sector that I know that the whole sector is being bought. Yeah, so you can always do that. But a lot of the scanning software, you can go right up here. Can you see this? Yeah, right up here, maybe out of the picture. Click right on biotech, and it brings it all, brings it up. So here's the logic. If we know the market's not selling off, and if we know a sector is acting pretty strong, and then we can go to that sector and see which stocks are in that sector and analyze which one of those charts are acting the best. Now we've just kind of put all the stars in alignment that we're buying a sector that seems like everybody else is buying. Which means we're not buying a renegade stock, that we're buying a stock in sectors that that the big money has come into. So why we're here, same as when you get out of a long position, that same scenario is true on the short side. What does it look like we've got going on right now? It looks like there's possibly a trend channel kind of developing here. And we're getting toward the oversold area. We were short Lilly because of this doji gap down. But now, when it hit this support area, it started throwing buying. So as soon as it came back up above yesterday's open, that kind of told us that there was buying going on, and the CAC is getting closer to the oversold area, and it appears like there's some support here. What's that tell us about our probabilities? Telling us probably want to start covering that trade that is starting, the probabilities are starting to go against us. Same thing on Weibo. We were short this one because of kind of our evening star signal failure at the T-line. We covered half our position because what might be going on down in this area? A support level. Now we've got a little bit of buying. So if this opens positive tomorrow, which would also be a function of seeing the market open positive tomorrow, that's pretty much telling us, yeah, they're supporting in here. We shouldn't be short. Probabilities went against us. Close it out and move on to something else. We've been short this one. Oh. SEGM. Now, why is that not coming up? Well, if that ain't a fine, howdy do. That one has been a good short, but today it did a doji type day in the oversold area. So that tells us if it opens positive tomorrow, I'm going to close that one out. All right, some of the biggies, we can see what's happening on Tesla. There's our little J-hook pattern. If you're buying this, what's your first observation? See what happens here at the 50. If it goes through, wave 1, wave 3 brings you back up into this territory. Facebook has been showing good strength. Because notice kind of our little doji sandwich, double doji sandwich, and then look what happened as they pulled back to the T-line. Bullish Harami, and what did that tell us? Was that it? That may be it. SEMG. Whoops. SEMG. Thank you very much. I just write things down so fast. Just speeding pen. Mixed it up. So notice where we had this little doji. Cassick's in the oversold area. Look where it bottomed out before. That's telling us if they open this positive tomorrow, cover it immediately. You start taking your profits. Things are starting to go against you. Netflix, kind of the same observation. Did kind of a spinning top doji day, not quite in the oversold area, but what other piece of information kind of tells us we need to watch out at this level? It's doing it right here, right smack dab off the 200-day moving average. That pretty much told us if they open a positive today and you were short, close out the position. It did support here. So, again, this is just kind of common sense built into your analysis of what's going on. There's a J-hook pattern in Amazon. So the old rhetorical question, where do you grab for a fallen knife? Well, there's our bullish Harami. What was another piece of evidence that told us it was time to start going long? Where do most people sell? They panic sell at the bottom. Look how big. When they gapped this down and sold it off hard, what happens after a gap down? We should start watching for a buy signal or buying. What was another relevant analytical factor? Look how far away you had moved from the T-line. So if this was a buy signal and you started buying here, what was your first likely target? Coming back up to the T-line. Fortunately, went right through. Now you're doing a J-hook pattern where it's obviously supporting at the 50. If it starts trading back up in this range, you can start buying it because it'll be confirming the J-hook pattern. Apple, little scoop type pattern, almost a little bobble breakout. Just allows you to be much more certain that if this opens positive tomorrow, we got a bobble breakout, the 50 is not acting as resistance, and we got a possibility of a J-hook pattern, wave 1, wave 3, taking us up right into the area that would fill the gap. So if you're looking at a sector that's showing, or the ETF is showing that there's a bunch of buying coming in, then you can start going to the different stocks in that sector, like Clovis. There, it's got a little kicker type signal. If it opens positive tomorrow, what's it telling us? First of all, it's telling us that it's confirming the kicker signal. Secondly, it's telling us that the T-line's not acting as resistance. And third, it's pretty much breaking this downward trend channel. Where do you think your first target is? Right, at least back up here to test the 50-day moving average. Now, that's your first target. Let me make this even smaller. Yep. Yeah, I guess I'd even go from here. I want to see what everybody else might be looking at. So from right about here to here is my Fibonacci retracement numbers. So I've got these three levels that I can also look at. Now, if this took a week to get back up here. I'm figuring by that time the 50-day moving average is here. That might be the place that everybody's watching to see if it's going to resist at that level. So I'm not looking for it to go there. I just know that if it gets there and I see a sell signal, that's where everybody's decided to start selling. That's where you want to take your profits. Okay, so let's see, what else did I have here? The fry pan bottoms are working. There's switch. Kind of a little, look at your Morningstar signal. Look where you broke out on it today. What's that tell us? Got the prospects coming out of this fry pan bottom J hook of wave 3 being the same magnitude. CNSL, fry pan bottom setup. Where do you think your next likely target's going to be? Right about where this fry pan bottom became indecisive. Look for the 50-day moving average. And MANH. What do we got setting up here? Possibility of a J-hook pattern. If we get a J-hook pattern and positive trading, what's that tell us about our fry pan bottom resistance? It's not there anymore. Look for possibility of another move like this. So visually, we can recognize where the big price moves might be occurring. This is that Luckin Coffee, bullish engulfing, might be heading higher. What's our high probability trades? The bobble, SGEN. Whoops. Intelsat. Positive open, what do we got? A bobble breakout. Where's your next likely target? Right up in this range. PGTX. Positive open, bobble breakout. Least figure is going to come back up into this area. So we can identify the pattern setups. There was your kind of your bobble breakout. Now you're up here also on a breakout area. If this opened positive, what would that be telling us? Wave 1 and wave 3 are probably going to be the same magnitude. A bobble is the same as a J-hook pattern, except a little bit more defined. You have wave 1, you have a failure right at something that you can obviously see, like a resistance level of the 50-day moving average. It pulls back, and notice how it did a Morningstar signal here at the T-line. Now we've come back up through the resistance level. So if you took out the 50, basically you have a J-hook pattern. So a bobble pattern, I'm trying to think where else we had some. Not there. A bobble pattern is just merely a J-hook pattern with much greater definition to it, where you can actually see where it resisted and where the when it broke through that resistance a second time, it's doing a J-hook pattern. There's this is what we call the McMuffin. Morningstar signal followed by a doji sandwich, or your morning sandwich. What does a Morningstar signal imply? Well, because it's one of the 12 major signals, it implies there's going to be more upside. What do we know about a doji sandwich? It implies there's going to be more upside. So you combine the two, what's your implication? High probability there's going to be more upside. Yes, kind of a little bobble breakout here. This one was real quick. But notice where it's breaking out, right through this level. Where do you think the next target's going to be? Right, at least coming up to fill this gap. Good one, Steve. Sienna, J-hook pattern setup. Meaning, if this opens positive tomorrow you can start buying with your first target here, and if it breaks through here, you could have the same magnitude, another 10-point run, taking you up into the $52 to $53 range. LJPC, same scenario. Big price move. If you missed it, at least now you can be ready for the J-hook pattern setup, that if they start buying this, if this is a J-hook pattern setting up, what's it tell you about this move right here? Well, if this went from 5.5 to 12.5, 7 points from here should take you up into the $17 range. So you get two benefits of being able to identify a pattern. One, you know if it starts confirming, you've got a high probability of a positive trade. And two, you can pretty much measure what your next price move will be. So instead of being in something that might be a slow, steady uptrend during a slow, steady uptrend of the market, you're now going after things that have much greater prospects or much greater profitability potential. You're looking for the strongest reversal signals? Oh, for crying out loud. CJ had a kicker signal. I thought I was rolled right into that with a nice segue. You also have a kicker type signal on Moss. That little kicker signal told you they were breaking out of this range. Next target I would suspect is the 50-day moving average. We looked at ARQL because this becomes a high probability that you're going to be in a 45 degree, same trajectory as here. Now, that 45 degree is likely, as we saw over here in something like plan, that you have a 45 degree. So if you start seeing the bullish confirmation, and you know you're probably going to be in a 45 degree steady uptrend, you can either buy the stock, you can buy the calls, or you can calculate how far might it go during the next 3 weeks and maybe do a call spread to give you a little bit more leverage. This is the advantage of knowing what the price move might be with a high probability that's going to go in that direction. Big morning star signal on Very. Wave 1, wave 2, and this isn't magic. As you can see, this uptrend started right smack dab off the 50 with stochastics in the oversold area. Closed right on the T-line. What are all the positive elements we can analyze on this one? If it opens positive, it's telling us it's confirming the morning star signal. It's telling us the T-line is not acting as resistance anymore, and it's breaking wave 2 going into wave 3. I think I've got this written down right. TDCA, big bullish engulfing off the 50. Prospect of going back up into that trend channel. Oh, I don't know. Is anybody else's sound breaking up? I can't make the sound break up because breaking up is so very hard to do. I'll just take a look real quick. Oh, that's not so much a wedge. Well, maybe it is so much a wedge. But I'd call that more of a J-hook pattern, with this being wave 1, wave 3 up another 7 points from here. And BNFT, what did this do today? Change this direction. Look at your bearish J-hook pattern. Wave 1 and wave 3 are approximately the same. Now you had a little left-right combo. I'll make this bigger where you can see it. left-right combo confirming. So what did today's action tell you? First of all, remember, a left-right combo is probably one of your highest probability reversal signals. Anytime you see that doji involved with a reversal signal, it's usually going to be that much more, I want to say, strong that a reversal has occurred. And then, when they opened positive, what did that tell us today? It was confirming our left-right combo, telling us our T-line was not acting as a resistance, and it's breaking this downtrend right at about the same level that you suspect wave 3 to be finishing out. So remember, anytime you see the doji gap up, there's your best friend. What do you think it's probably going to do from here? Good likelihood you got a 45-degree coming from here. ADP, your best friend. What do you think it's probably going to do from here? I get back into that trend 45 degree. CENX. Notice it had a little best friend signal the other day. You can be buying this if it starts coming up through this level. Where do you think your next likely target's going to be? Back up to the 50-day moving average. So these are all just things that you can analyze, knowing what the strength of your signal was. EXEL kicker signal. If it opens positive tomorrow, what's it telling you? It's confirming the kicker signal, and it's also telling you the 50-day moving average is not acting as resistance. And Mattel, if this opens positive tomorrow, what type of signal got you started on this one? Look at how big your Morningstar signal was. Then look at your bullish flutter kicker right in here. That took you right up to the 50. If this starts trading positive, what's your next likely target? The 200-day moving average. If you want to have some safety factor, look at the doji gap down, bearish best friend on AMAT. The Stochastic's heading back down. If this opens lower, where's your logical target? Right there. You might even look, I might even look at buying a put spread for, let's say, 2 weeks out, which might be buying a 40, selling a put, buying a put and selling the 38s, whatever the net of that would be. Let's take a look at that while we're here. If I can do this. Trade all products. AMAT. Okay, June 28th. Approximately 2 weeks away. Hold on, let me get this set up to where we can see more strike prices. So if we decided to sell, let's see, it's closed at 40.50. So let's just take a gander at a vertical put spread where we buy and our target is the $38 area. That means we would be spending 75 cents for it to go to $2.50. So that's obviously a reasonable rate of return, and that's an obvious target. So you kind of put the math together to make that a worthwhile trade setup. SE. Here's kind of your bearish belt hold. Look what we can analyze on this chart. First of all, where did this bearish belt hold occur? Right about the same level it topped out before. Look what we've got right now with stochastics heading down. If this opens lower tomorrow, what do we got going on? A bearish doji sandwich telling us we're staying below the T-line. Now, where do you think your next likely target's going to be? Another one that gives you a high probability trade setup where you can either do a put spread or even just buy the puts, whatever is more attractive to you. Brooks Automation, big bearish engulfing signal. Where did this occur? Kind of where it topped out before. Where do you think the next target is? Down here. So always want to look at a few short positions. Look where the selling started. There's your bearish belt hold. Try to take it back up. If you see a bearish signal, followed a few days later by another bearish signal, that's telling you the bears are taking control, especially if you're up here toward the overbought area. First target might be right here, but if it got through the 50, your next target. So it's always good to have a few short positions because you're always going to find short positions in an uptrend that make you good money. And also it's good to have a few short positions on because what happens if tomorrow we wake up and the market's opening down here and trading lower? Well, those shorts are going to produce some profitability for us while we're closing out some long positions. Okay, I guess that's about all I've got for tonight. So are there any general questions on candlesticks while we're here? Whoops. No wonder there wasn't any questions. I got to scroll down. Sorry about that. I was stuck way up there. Oops, I didn't scroll fast enough. I was stuck way up here. I have yeah, you can set up your scans using the doji. I've got a scan that I'm looking for dojis in stock prices that are trading below stochastics of 20. That means I've got stocks that are forming dojis in the oversold area. Webb, that's an irrelevant question. I have no idea of what is happening because of the Fed meeting tomorrow. So, again, it boils down to I'm not intelligent enough to know what reactions might occur based upon what they do or they don't do. But I am watching to see what everybody else's reaction is. So I'm not trying to anticipate. I often get asked the question, where do you think the market's going to go in the next 30 days? And my answer has been for the last 40 years, I have no earthly idea. But I do know where it's going to go based upon what the market is telling me. And that's what I want to be investing in. I want to be investing in a analysis that I can control and know what's happening in the market, not trying to project what might happen in the market. Joe, no, we haven't done that yet. Kicker signal. Kicker signal. A kicker signal is when you see a candle that opens here and closes here, dark candle. The next day, it opens and goes the opposite direction. The investor sentiment has been kicked in the opposite direction. That's your strongest reversal signal. Brad, hold on to your individual ones until I tell Jim to do the double line. Hey, yes, we do it all from A to Z. We start with the 12 major signals, of which most of you have already seen. But the way we do it is we start with the doji, and we start analyzing the doji, where it occurs. But in that process, obviously, when we're analyzing everything, we're analyzing what other indicators, like the T-line, the moving averages, where the stochastics are. So the first morning, we go through the 12 major signals, and then that afternoon, we go through the patterns. Then usually late that afternoon, we go through the top-ranked signals and patterns. But as you're going through all these, which you've probably seen before, you're starting to get the philosophy or the psychology of candlesticks just kind of melding into this whole analysis, one right after the other. Once you have that, the next day we do how we use the gaps to enhance our returns, where to set our entry and exit strategies, where to set your stop losses, how you stand for the best possible trades. So the whole process in this 2.5 days, but the one feature that everybody that comes is usually aware of by the time they get there is if you are having some sort of problem investing, and the problems rank all across or range all across the board. That, let's say you fly in from some place, I pick you up at the Rochester airport, it takes us about an hour and 15 minutes to drive down to the lake. But during that hour and 15 minutes, we're usually, if there's 2, 3, 4 of us in the car, we're going through what everybody's problem is having. So let's say somebody is having problems knowing when to take profits. Well, I know to kind of build that into the analysis of the charts to say, all right, now here's where you start taking profits. So, or somebody's having a problem analyzing and then entering a trade, or they're always entering the trade too late. I know how to address that, so we kind of build that into the analysis of all the charts. So the point of all this is, even though you've seen a lot of the trainings piecemeal, now you're going to get it in a very concentrated dissertation of starting from start to finish, the psychology, and all the common sense that is built into candlestick analysis. And I use the term common sense because when I started learning candlesticks, I would look at something and say, yeah, I knew that. Then I'd look at something else and say, yeah, I knew that. So what it really does is take all the stuff that we know we should do and we don't, or get rid of all the things we know we shouldn't do, and kind of solidifies this concentrated analysis into turning your mind around so you're now investing in the right direction versus being what the signals are representing is what everybody's always doing wrong. Jeannie, you can either use Metastock, you can use TC2000, and right now I'm trying to kind of fine-tune the scanning for Thinkorswim, since I know a lot of people use Thinkorswim in here. So we're working on that right now. Lee, I don't even remember of what the 8 EMA is. Don't know. Let's see. Modify. It's exponential. In this case, we're using the closing price. Is a doji gap up is bullish and a doji gap down is bearish? Yes. Just think of the logic of which ones were our best friend signals? Think of what the logic is. Indecision, and then the ultimate indecision, a doji. When they gap it one way or the other, what's that tell you about that indecision? They've made their decision with great emphasis. So it works just as easily on the bullish side as it does on the bearish side. Kind of a doji shooting star, gap down. Okay, I think I've got most of the questions. Oh, somebody was asking, the price of the lake is $4,900. Now with that, you don't have to worry about rooms. Everybody's got rooms there at the house. You don't have to worry about food. You're going to be well fed. You don't have to worry about drinks. Got all sorts of drinks, lemonade, iced tea, wine, or whatever beverage you like to have in the evening. And you get a free membership for the next 12 months afterwards. Plus, we've got about $5,000 worth of training information on the website, which is all available to you for free. So let's say you want to study more of the 12 major signals. All you do is email Abraham and say, I was at the lake. Can you send me the 12 major signal lessons and whatever you want. So, I mean, you get as much free material as you do for the 2-day training. Now, I tell people, if you're really serious about investing and you don't want to keep flopping along for the next 6 months or 8 months trying to get this all in your head, we've had a number of people that have come to the training that trade full time, number one, and we've actually had 2 or 3 people that not only trade full time, but they've set up little chat rooms or websites where they train other people how to use their training method, which has kind of the background of candlesticks with it. So, anyways, if you need more information, just email me your address and I'll give you a call and we can go over what all is involved. Okay, Jim, go ahead and do the double line. And in 3.6 seconds, do the next double line. I think we did this one. This one is kind of a fry pan bottom setup. Look at your morning star signal. Look at your trajectory. I'd be a buyer of this one on positive trading. CDE, there's not quite a bottle breakout, but your J-hook, I wouldn't be afraid to be buying this one, especially if it came back up through yesterday's open or Friday's open. Netflix came back up strong with the evidence that even though you weren't in the oversold area, we did a spinning top type day right off the 200. I would say the worst case scenario is it's coming up to the 50. So you watch that bounce, but then you're still in this sideways trend, so you have to watch out to see whether it can break out to that level. McDonald's, you've had a sell signal. Big bearish engulfing. Didn't close below the T line. Now you've got a second bearish engulfing signal occurring at the same place. If I was long and this opened lower tomorrow, whether that was a function of the market or of the stock itself, I'd take profits. Tiffany, nothing yet. Wouldn't be short, no, but I wouldn't be long either. You have a little Morningstar type signal. You're sitting right here at the T line. Yeah, I wouldn't be short this one right now. An Occidental, this one I'd be more apt to start buying. The Cassic's coming up. You had a little doji gap up. I'd be a buyer of this because it's telling you that gap up through the T line. It's telling you starting to get some buying pressure on this one. AXSM, another one that if you'd been short, you could be buying here, and I would still be a buyer of this one if it opens positive tomorrow. Then just use the T line as your stop. MRTX is doing a little scoop type pattern. Another one you can buy on positive trading because if it comes up through this level, now you've got wave 1, wave 2 going into wave 3. 22nd Century, big bullish engulfing. Kind of broke this downtrend. You can be buying this one. Just make sure your volume is hefty on a $2 stop. Yeah, I would think the 200 is your next target, Bert. Team, nothing wildly exciting. All you can do on this one is stay with it as long as it stays above the T line. Gold. Gold is backing off a little bit. Let me pull it up here on, oops, I can do it right here. This is August gold. Getting a little bit toppy. That one right there was the one that was kind of taking the steam out of the uptrend, that big shooting star doji, and they haven't been able to come back up. I'd be ready to close out positions if they can't get back up through this level. That's telling you now, without getting back up through that level, you might be stuck in a consolidation stage. Las Vegas Sands traded lower today. Again, look at your doji, gap down, evening star signal. You want to get ready to short this one if it opens lower tomorrow, because now what do you got going on? Wave 1, wave 2. If it fails the T line, look for wave 3 to the downside. Wynn Resorts, don't know yet. Now look at what's happened here. This is not uncommon, but this is something you can always kind of keep your eye on. If you see a flat trading area, look at kind of a wedge formation, and you see a doji at the end of it. Remember, a doji is your ultimate indecision. Now you just watch to see which way they open it. That's going to tell you which way the next trend is going to be moving. AKAM, if you're short, you stay short, with the prospect of it coming down to test this lower trend line. You can see what's happening. You've got a spreading action, which usually means they're coming back down here, and sometimes this wave right here is a real puncher. It really moves big. Yeah, so you can be short. Another one that you can get go short. Again, just the logic. As you see a bearish engulfing signal, see another bearish engulfing signal, or close below the T line. Where's your next likely target? Back here to the 50. So if you shorted this one on weakness, where's your logical stop? Don't want to see it close back up above the T line. Bees are home. You stay long. You can see you've got a fry pan bottom, but you can also see you're starting to get up in the overbought area, and it hasn't really moved all that much. You always keep a safety stop below the T-line, because if they bring it back down through there, especially up toward the overbought area, they didn't have enough strength to continue to move it higher. Roku, another one that you're starting to see a little bit of toppiness up in this area. But it opened positive and traded positive. So all you can really do with Roku is stay long until you see a sell signal and a close below the T-line. United Health, nothing wildly exciting. As a matter of fact, you might be caught in a little wedge here. If you're long, it has to stay above the T-line. If I was going long, I'd probably be looking more in this area to start buying. These, notice the gap down. They just came up above the 50, and then the next day they did a little bearish kicker signal. Now that little bearish kicker signal wouldn't be very relevant, because it's not that big, other than the fact that you're in the overbought area and they did it right here at the 50. That would tell me you want to start thinking about shorting this one. And you got more evidence of that is when they took it up again today, and then they couldn't hold and close near the lower end of the range. That's pretty much telling you there's a failure there. That's a good short setup. Now, obviously, you watch if it trades weaker to see what it does here at the T-line. But if it fails, where do you think the next target is? Could be back down to the 200-day moving average. We did win. Got to see which way they open this one tomorrow, or which way they open it. Here's another one where you've got sell signal, tried to take it back up, and they did a shooting star. Get ready to start taking profits, especially if this one opens lower and heads back toward the T-line. And that signal right there, this is what we should, this is why we're studying candlesticks. The first pieces of evidence of what's happening in investor sentiment is the signal itself. Then we can start applying everything else to that analysis. Twilio, Doji right here. Same scenario. It's going to tell you which way they're going to move it based upon how they open it tomorrow. Hoop, all you can do is stay long, have your safety stop below the T-line. And ZS has to open positive. Look where it failed. There's a bearish Harami right at the top. If this opens lower, you close out the position. LXU. That's a toughie. Nothing real great other than your basing in here. So you can buy this one on positive trading. It just needs, you want to see something strong telling you that the bulls have started to take control. FedEx, you stay long, but notice how you're starting to run out of steam on your stochastics. If you're long, you keep your safety stop below the T-line. AMD, notice the warning. What was the warning when this broke out? They gapped it up and did a shooting star in the overbought condition and then traded it lower. What was your next likely target? Back to the T-line. How did they get to the T-line? A bearish doji sandwich. What happened after the T-line? Traded lower and another bearish doji sandwich. Where do you think your first target's going to be? Hertz, There was your left-right combo. Whenever you see a left-right combo like this, that usually acts like a continuation pattern, telling you got more upside. I would suspect first target up in this range. Berry. There you go with a J-hook pattern, a doji right here. If it opens positive tomorrow, what do you got going on? You've got your J-hook pattern supporting right off the T-line in the 200 with a doji sandwich breakout. First target at least here. If it goes through there, it comes up here. If it breaks through there, it's coming up into the gap area. Boston Scientific. Another one that has to open positive and trade positive tomorrow. Giving you a J-hook pattern. An LSCC, bullish engulfing. If you closed it out here, get ready to buy it back on positive trading. Another J-hook pattern setting up. BHP. That's getting a little bit dicey. Notice once they gapped it up in the overbought area, even though it was a breakout, notice all the indecision up here. If you're long and they start trading this lower, they're coming back to test the T-line, and we don't know if it's going to support there. It may come back and test the 50. So this one I'd be out of on any weakness tomorrow. Fluor, not anything there to get excited about. This one would definitely have to come back up through this level to go after it. Right now, if you were long, notice yesterday was not a sell signal. It was just a down day and an uptrend. If you're long, it definitely has to open positive and trade positive to want to stay in it. EPR looks like it's supported at the bottom of the channel. Just be aware that even if it goes to the top of the channel, that's not a very big percentage move. But that's likely where it's heading to. Canadian Pacific. Just stay long, as long as it stays above the T-line. DXR, absolutely nothing. SID, shouldn't be in it. Should have been out here. Told you they weren't taking it up anymore. Not necessarily. You have a bearish engulfing signal. Now, if you're long and you want to stay long, it has to open positive and trade positive. If it opens lower, what's your risk reward? Pretty much can assume they're going to come back and test the T-line. You can always see what it does. If it starts coming back up, you can always rebuy it. So I wouldn't have closed it today, but I'd definitely be ready to close it on weakness tomorrow. AMRN, not anything wildly exciting, but if you're long, you just stay long. Kind of a little breakout right here, and it's still using the T-line. There's your stick sandwich. So you can still buy this. Let me make this smaller to see what it looks like. You can still buy this on positive trading, just not wildly exciting. This Con Ed, stay long, as long as it stays above the T-line. Yeti, Yeti has to open positive and trade positive. If it starts trading lower, it's coming back to test the T-line again, which means it may be a day or so before you can really see whether it's going to support at the T-line or not. Another one that has to open positive and trade positive. Got kind of a kicker signal right here. Kicker signal, not quite an evening star, but evening star pattern. I'm sorry, morning star pattern. So it has to open positive and trade positive. Not your best pattern because it's not a bullish engulfing. So you just have to watch to see where your first resistance level might be. In this case, might be right there. So anytime I see where there's not a reversal signal, it's not telling you that it won't be a uptrend, but it's usually going to be a lot weaker, and it won't have the same force that a true candlestick reversal signal will give you. There's kind of your bearish dark cloud right at the 50, gap down. If it doesn't hold right here, expect that to be your target. Home Depot. You did a doji, so this is why we want to understand what a doji illustrates. Indecision in the overbought area. Any other factor, like it did a doji right about the same level it topped out before. If you're long, where's the logical place to put a stop? Right here at today's low. If it comes down through there, you know they failed on the breakout. They're at least probably pulling back. And notice the distance now that they've pulled away from the T-line. Look for some profit taking. I think we did Trade Desk, right? Yes, Shooting Star. I think we did Occidental. Needs to open positive. Field Air. That a little left-right combo. Close below the T-line. Tweezer top. Tweezer tops when you got 2 days very close to each other, trading right at the same level. Then you've got the selling. There's your left-right combo. There's your confirmed selling. I'd be ready to short this one on weakness. Is it an inverse J-hook? I don't know which one we're referring to. That was probably a long time ago. Best Buy, kind of a little doji sandwich today. Just watch now to see what it does at the 200. Kind of getting a T-line crunch going into the 50. Very simple. If it trades back below today's low, you close it out if you're long. If it comes up through today's high, you can be a buyer. It's breaking out. AKAM short. All right. Okay, so there's still lots of good trade setups. Things that you can sink your teeth into. J-hook patterns. Kicker signals. So, nice thing about being able to scan for candlestick signals is you're always going to find more trades than you're going to be able to handle. So at that point, it becomes cultivating to see which ones are the best ones. So with that, everybody have a good evening. We will see you bright and early in the chat rooms tomorrow. We'll see you then.